once again, SPY has closed at a new all-time high. Are you guys surprised? So let's try to break this down, what happened today, okay? This is why I always try to tell you guys, the people that's watching my video, yes, you guys, I always tell you guys what? To be a bull in a bull market. This is why we want to be a bull in a bull market, because more often than not, the SPY just continues to melt on up, bouncing off this 5-day moving average in a very strong bull trend. And every now and then it drops just below the 5-day moving average. And if you don't know it yet, I like to use my moving averages as my support and resistance levels. Okay? I love it when it drops just below my support level, because that is where I look to enter. Now look at here. On this day, on Friday, the SPY went into our area of liquidity. That's this orange area right here. For all our new viewers, areas of liquidity is where stop losses are building up from retail traders, okay? They have this resistant level since April, with stop losses potentially building up in that orange area. All right, because if you're gonna short it, that's where our retail traders will set their stop loss based on the structure, okay? So we had SPY go into the area of liquidity right here, the small breakout, okay? So what happened? We had some shorters that tried to short it on this day, on the Thursday, because we stopped right at a resistance level. So what did they do? They tried to short it. Beat the market traders. We didn't try to short that, did we? Okay? Because we're not, first of all, we're not shorting in this bull market. And even if it's at a resistance level, we understand that the market makers can try to fake us out, which it did the very next day. So all the people that shorted this day got screwed over this day, and SPY just continued to go up. Head right into our area of liquidity just above the resistance level. Okay, just above it. So what happened on this day? This day, the fear and greed index from this link right here, which I'll talk more about in a little bit, was at greedy, was showing the greed level. This brought in the breakout traders, the people that was waiting for the breakout and thinking they're smart and try to come in at the tippity tip, because I always tell you don't enter at the tip, you enter at the dip, but people want to enter at the tip because they don't want to learn their lesson. Got in the breakout traders, and boom, what happened the very next day? What happened the very next day? On this day, today, this morning, we had a gap down. We opened right here around 444.50. Okay? Now, if you guys was like me trading this morning, what happened? You should have seen what happened this morning. We had SPY dropping all the way down to 442.85. Had people losing their marbles. People getting scared. Oh, it's bearish, huh? So all the breakout traders that entered here and the breakout got screwed over today. Beautiful when the SPY dropped down. Beautiful. Took y'all out too. You see how these market makers work? They know what they're doing, guys. And if we can try to learn more about how they do and what they do with what they do, did that make sense? Figure out how these market makers move, you know? It'll help us out with our trading. So basically, they pushed it all the way down. They didn't even touch the 13-day moving average. But if you watched my weekend video where I did a macro level, I did technical analysis on the weekly chart. Look where it bounced to. Look at where it bounced to. Right there at our 5-day moving average. Remember I talked about how the previous week SPY was a little bit overextended. Not too much because it didn't go above the upper Bollinger Band. But it was a little bit because it didn't even touch our 5-day moving average last week, you see? So I wanted to see that. And sure enough, on a Monday, they opened it up just like that. They touched our 5-day moving average. It was a very nice drop. And it continued to go back up. Very nice. They faked us out. They faked the bears out. They faked the bulls out. This is why I tell you guys, stay objective. Look for buying opportunities. Okay, and I always tell you guys where I like to enter, or where you should enter. Okay, just under the support levels. right here, using these moving averages, the 5-day, the 13-day, the 20, and even the 50. Okay? And the plan went perfectly once again. Of course, I had to use the weekly chart to help me make my decision, okay? It's alright to use multiple time frames. But anyways, I hope you guys understand what happened. Okay? Got the bears coming in today. Bears got screwed over here, bringing out the breakout traders, the bulls, who like to buy at the tip. They're not bulls like us. We bulls too, but we buy at the dip. These guys bought here at the tip. Got screwed over the next day. They got scared out. And after, the dip got bought up and it got pushed all the way up, breaking the resistance even higher than Friday at a new all-time high. Yes, we are in the area of liquidity. Well, guess what? As long as this level holds, this resistance level right here around 445, 446. Because I did have a price target. I told you guys since last week. I had a price target in the range of 443 to 446. I told you guys this. And now look where we are. Even higher than my price target. So my bad, guys. Once again, I failed you guys where I come up short. Okay? With my price target. It's even higher. So because of it, as long as 446 hold, my next price target is 449. Alright? Don't doubt the SPY can't hit my next price target of 449. And then at 449, maybe we'll get a decent pullback or correction. But who knows? Don't call a top, guys. Please don't try to call a top in this strong bull market. Look what's happening. Every time someone call a top, SPY just continue to creep up. Let's think in terms of probability. Don't get me wrong. When the bears are right, oh, they're right. You know, the few times that they're right, it's a really strong move to the downside. Okay? But look at this chart. How often they're right compared to how often they're wrong. They're more wrong than they are right. Look at all these up. And then it finally go down. Up. All right? We want to make the move that with the highest probability so we can have profits. Okay? So I'm still bullish on the SPY right now. This is bullish price action, trading above all our moving averages. Don't call a top in the bull market. My next price target is 449. But just because I'm a bull doesn't mean I'm gonna enter right now and go long at these at the tip. Okay, guys, we want to identify our support level. So I would enter. Like I said, we have support here at 446. That needs to hold up. We also have the 5-day moving average. Keep in mind, these moving averages will creep up tomorrow to the next day. So about 445. And here about 442.50. And of course, the 20-day moving average. So 441.38 today. It might move up a little higher to 440.50. Okay? Keep an eye on those levels. As long as SPY is above 440.50, I am bullish. Okay? And if it drops down a little, remember about the concept of areas of liquidity. All right, because a lot of people use these moving averages as support levels as well. Okay, guys. So it's highly possible that they let their stop loss be right under the 20-day. So when you see it going just under the 20-day, don't be scared and get tricked thinking, oh, support's broken. No, you look for buying entry. Okay, you want to think of the bull trap and the bear trap pattern. If you don't know about that, look up some YouTube video. I'm pretty sure there's some good YouTube video that explains it. Maybe I'll make a video in the future explaining the bull trap / bear trap pattern, beat the market style. Okay, all right, guys. So I'm still bullish on the SPY. Taking a look at the VIX. As you can see, the VIX is it closed right at the 5-day moving average. So this is a little bit concerning because I want to see the VIX below all our moving average. So it closed right above the 5-day moving average, was showing some type of strength. Okay, it's showing a little bit of strength because technically speaking, even though this is a red candle, this is still technically a green day because the SPY moved up. Okay, I mean not the SPY, the VIX moved up from this day to this day and it closed higher. So this is a red candle, but it's a green day. Also, the SPY had a green day. So what does that mean? It means we have a divergence, guys. We have a divergence. So be careful when we have these divergences because come the divergence, especially when there's a divergence between the VIX and the SPY, we get a big move, okay? So be careful. We have a lot of people trying to short this right now. If you look at barchart.com, we got a lot to put the call ratio. It's a little bit ridiculous. Got a lot of people trying to call a top in the bull market, which I don't recommend you guys doing. We also have a bullish divergence between the SPY and the VIX, okay? So the last time the SPY and the VIX had a bullish divergence like that was back in September of 2020. Remember what happened in September of 2020? I mean, let's see if it take you back. That's all like a while ago, huh? Let's see. Forgive me, guys. We're almost there. Right here. September 2020. We had a bullish divergence between the VIX right here, September 1st. Let me see. We go all the way back. Bear with me, guys. Right here. The green day. Green day for the VIX. September 2nd, green day for the VIX. So we look at September 2nd, green day for SPY. September 1st, green day for SPY. Look at that blow off top. Blow off top. And then the very next day, boom, we had a, elevator down. Okay? So my next price target for the SPY is 449. We have a divergence, a bullish divergence. We could get this blow off top. Got a lot of people that are bearish. We could get a short squeeze. Because them short people that are trying to short, they're going to realize, hey, we're still in a bull market. And then they're going to cover. And that's going to just blow off top. We'll see what happens. I think we're going to get a blow off top or some type of squeeze. But we'll see what happens. All right, guys? We'll see what happens. Price action is king. Please do not call a top in this bull market. Everything is still looking good to me. All right? So, bullish on the SPY. But that doesn't mean I'm entering at these levels, guys. It's a lot of moving. Sorry. And we're back. Alright. Big green candle. I'm still bullish on the SPY. 449. Maybe we'll get a blow off top. Okay. I don't think we should try to short this just yet. Alright. Too many retail traders are trying to do that. Okay. They're trying to be the next Michael Blurry or something. Don't be the next Michael Blurry. Be the next shoe. Okay. I talked enough about SPY. Bullish on the SPY still. Don't call it top. Moving on to the triple Q. Triple Q. Same thing with the SPY. We had this. Look at this long wick. Holy moly. Long wick. That's institutions, guys. Institutions played us. They pushed it down. And then they brought it right back up. This is a bull flag, by the way. It looked like it's trying to break out of this bull flag. I have the 370 price target from before. That's the previous all-time high. But if it breaks that, the next price target would be 376. All right. So we'll see what happens. 371 to 376 range. That's kind of a big range. But bottom line, I am bullish on triple Q still. Definitely buy the dip. All right. Look at this. All right. Let's take a look at Apple, a market moving stock. We had this double top, and then we had this bear bull flag right here that broke out. Boom. And it broke out from that bull flag. Now, of course, with this double top, all this area that I've been had for a while was the area of liquidity, which Apple is currently in today. Now, I want to show you guys something. Here's a 1 hour chart. It was very tricky to trade Apple today. So let me move the moving average. So Apple's above all moving average. Okay, guys, remember. So on this right here, in the opening morning, this took place around 9:30, I think. Let me do the 30-minute. All right, yup, around 9:30 in the opening. Apple went all the way up into our area of liquidity right here and just sold down and pushed it all the way down. Okay? From up here 150.62 and pushed it all the way down to 146.50. They took out the area of liquidity only for them to just push it all the way back. Faked us out, man. It was beautiful. It was a beautiful, beautiful move, guys. So when I see stuff like that, that tells me that these market makers, they want to push it up. They're still bullish on Apple. They want to push it up. They just had to take some people out first. All right. So we'll see if this continues to hold. The support level now is 149.91. Okay. If Apple doesn't hold above that or stay above that, this was clearly a false breakout, a bull trap to trap all the bulls. because they did take out the bulls this morning. And then probably that it drawed some bears, and then he took out the bears. You know how they do. The system's not made for us to win, guys. But it doesn't mean we can't win. There's still loopholes. There's still possibilities. We can do this together, okay? All right. So I'm looking at Apple. It's looking like a bearish chart. It's a bullish chart, trading above all our moving averages. Okay. Let's keep watching this level at 149.91. All right. Here's our moving averages. Yeah, it's still bullish, okay? Now, I'm not saying to enter at this level. I would say let it consolidate a little bit. If you're bullish on Apple, let it consolidate. Let it find its range. Let the market makers set up their support and resistance and see how they want to play us before we look to enter, okay? So, bottom line, I'm bullish on the QQQ and Apple still. All right, they've got this bull flag on QQQ. But I'm not saying to enter at these high level. The risk is really high right now. Be defensive. Raise cash. Look for that nice dip. We had a very, very beautiful, nice dip today. I hope you guys bought it. But if you didn't, I understand because it was a pretty tricky day to trade. Okay? But still bullish on the QQQ. 371 to 376 price target. Okay? Now moving on to ARKK. ARKK is pretty disappointing today. It was, at least trading below all our moving average. Okay, so but besides that, I want us to take a look at the price action a little bit. It looks like the market makers are building a range, because as you can see right here, right here, we had market makers building some type of resistant level right there, and of course the area of liquidity is just above it. So what happened here? Market makers pushed it above the resistant level, finally, took out the area of liquidity, only for them to push it all the way back down. But look at where they stopped. It's not perfect, but we got a double bottom right here. So what does that tell me? That tells me that the market makers are looking to set up another range to screw us over, okay? They're setting up a new level of support. So, because they're setting up the support level here at this white line, 115.45, my next buy target will be around the 113 to the 115 range. Okay, so they're gonna set up the support level. I want to see them take out the stop losses before I enter. Okay, so I will be looking to enter just below 115. Okay, so the 113 to 114, maybe 112 is my buy zone. Under 110, I would be bearish. Okay. All right, so that's what I got to say about ARKK. I'm looking for buying opportunities, okay? Because that's what it looks like. This could be like I said, this could be a double bottom. Double bottom is a bearish pattern, and it head right back up, okay? So we'll see what happens, what ARKK wants to do. Moving on to Bitcoin. Here's a daily chart of Bitcoin. Bitcoin has been trading above the 200-day moving average for 4 days in a row, although we are getting some red candles here, looking like some take profit, some people taking profits possibly, but I don't think so. I don't think it's anything serious. It could be just bull flagging, okay? Bull flag setting up. It could be just consolidating, basing before it makes another move higher. I still believe we are in a buy the dip market. You got Bitcoin trading most of our moving averages, except for the 5-day moving average, okay? But like I said, this 200-day moving average is a critical support level, all right? And we also had some bounces, previous bounces off the 13-day moving average, okay? Currently, it's at 44.7K. So definitely watch that level, all right? 45K, 45.4K, and 44.7K. And of course, the last one is at the 20-day moving average. This is at 43.1K, okay? As long as Bitcoin stay above 43.1K, I am bullish on it, okay? And of course, they have the 50-day, which is all the way down here at 37.4K, all right? And if it breaks this critical support level, I would watch to see if we get a bounce from this level, all right? But, you know, like I said, as long as it stay above the 20-day, I'm bullish on it. We have this area of imbalance, okay? Remember, we have areas of imbalance up here where there was a little too much sell orders at this level, okay? So if I move these moving averages, And yep, you can see here, no wicks to the left, no wicks to the right. I stopped right where this wick was. I stopped where this wick was. So this whole area was mostly just sell orders. So we need the market to come balance it out and add some buy orders there, okay? So I'm definitely watching. I have a 54K price target on Bitcoin. I think we will reach it. Don't panic if we get some dips. Buy the dip, guys. Buy the dip. Don't buy the tip, like I always say, okay? So that's it for my technical analysis. I hope this was able to help you guys. If you guys have any stocks you guys would like me to cover, if you like my trading style or my technical analysis style, definitely comment them below. Thank you guys for supporting me and supporting this channel. Continue to beat this market, and I'll see you all soon.